Hello and welcome to another update video about Gala. Gala has dipped into this support zone that I communicated in yesterday's video. We have seen already a first small reaction, but really only the smallest reaction, not reliable and really not, I'm not able to say that we have bottomed there in this wave 4 support zone, but we're going to take a look at that now. First of all, maybe before we dive into the microstructure, just a quick reminder, we talked about this ABC structure here. A C wave is typically a 5-wave move. I can visually already identify 5 waves. I have to say though as well that this is an absolute messy structure and I'm not confident about the micro count. I'm just not in the C wave. I mean, this looks like an ABC structure, but is this a 1, 2, 3, 4 with a very much extended C, wave 5? So 1, 2, 3, 4 and this wave 5 is extended, or is it a WXY and this was a small A, B, and this is a C wave? Would it make a great difference? Not really, but the microstructure is just a bit ambiguous, so I give my best here to give you some levels to watch. But to be, just to mention, this is not a great trade setup anymore. I don't think so, unless you're scalping this, and but the point or the time to get in was down here. We had an orange support region at the time, which covered this area. There was enough time to get a position. The forecast was for higher prices. The idea was that in this region, it reacted to the 50% FIB level. The box was this. No, that's not the box. It needs to be for here. So this was our support zone. I think I also added the 38.2 FIB level, but we had 2 touch points to the 50% Fibonacci level and it reacted. And they are typically the pullbacks you want to get in if you're a pullback trader. Okay, maybe you have another strategy, but I can tell you that now, I mean, what are we looking at? Maybe one more high. I mean, if we consider this as an ABC structure, the C wave usually would finish somewhere in the region between the 100% extension and the 161.8 extension. Okay, further extensions are possible, but that's typically the area. And it's already reached the 1.38 extension level, one of the ideal targets for a C wave. So yeah, maybe we get another squiggle higher. I'd like to see one because it seems to me that this last wave up was only a 3-wave move. But as I said, before, the highest probability element of this move is done, because what could we get? Still a 5th of a 5th wave. Okay, but then based on probabilities, that should be it. Now you can always get extensions, which is why I give you the support area. So as long as we're not breaking below 5.9 cents, further direct upside extensions are possible, and maybe this 5th wave will extend as well. But from what I can see right now is, okay, we're holding above support, we're forming higher highs and higher lows. In all likelihood, the uptrend trend is likely going to continue. The Elliott wave count allows us to identify relevant support levels, micro support, and this micro support range, let me go to the 1-hour chart, it's between 5.9 cents and 7.2. And the way this looks, it looks corrective to the downside. That gives some confidence in further, at least local, short-term trend continuation to the upside. We can also see a descending wedge pattern, quite typical for such a wave 4. And it might reach the 38.2 retracement. That would be the ideal target for a 4th wave normally. And you might have an A wave here, a B wave, and then maybe the C wave is forming an ending diagonal, 1, 2, 3, 4, 5, maybe one more low. So that could be it then. And if we see a break out of the wedge pattern to the upside, a convincing break, this would be the first indication that wave 5 has started. And where could that wave 5 take us? That wave 5 could take us to the next FIB levels, which are at, so we reached 8.6 cents here with that 3rd wave top, wave 3 of C, no, wave 3 of 5 of C. And the next level to watch is the 11 cent level. That's the 1.618 extension level. That's a target for wave C. But then when we look at the subwaves, there might be other targets. We're going to take a look at that in a minute. But also the 10 cent level is a larger degree Fibonacci retracement level. So 10, 11 cents seems to be key. Yeah? But then, okay, can we calculate another target or another way? Well, the only other way you can calculate a target is to take the length of waves 1 and 3. And we go to the low of the wave 4. Now you see the problem, I don't have the low of wave 4 yet, but let's assume it goes down to the 38.2 fib level at 6.4 cents, 6.5, because it's an ideal target, right, for such a 4th wave. Then we're typically dealing with the 38.2 or the 61.8 extension levels as next targets, and they are at 9.3 and 11.5 cents. Okay, so what does that mean? Let me hide the ones that are not relevant. Basically, that means we have 4 levels to watch if we make another high. We have that 9.2 cent level. That would be quite weak for a fifth wave, but the first valid target. Then we have the 10 cent level, which is structural Fibonacci resistance. We have the 11 cent level, which is the next key level for wave C, and then an extended target 11.5. So there's a target box between 9.2 and 11.5 cents for the next move up. That's my update about Gala. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.